man, so a big day for crypto and the markets in general as the Feb CPI reading came in at another 40-year high. Yes, we met expectations exactly, with inflation rising 7.9% year over year. I also tweeted the figures out as well. That's 0.8% month on month, and it meets expectations exactly. And what was that followed by? Well, it was followed by an interesting movement in the Bitcoin price, because before the interest rate reading, we were hovering at about 39,300. When the announcement came out, we got a run all the way up, as you can see in the charts here, all the way to a high just here of about 40,300 before then giving it straight back up. These are minute candles, by the way, so giving it up about 5 minutes later, it was all gone. We fell as low as 38,500, and now we're sitting at about 39,300, looking to kind of settle itself right now. But what's going on? What does this mean for the wider markets? And why was this CPI reading so hotly anticipated? We're going to cover all of that off and more. Make sure you hit up the like button and subscribe. Don't forget to check out NordVPN, who are kind enough to bring us this video. So make sure you're staying safe in crypto and you have yourself set up on a VPN. 70% off. Coupon code. Oh man. Right. So here on Bitcoin, why was inflation important? Well, inflation was important because it was the last reading, and it is the last piece of information we will receive on the markets before the much anticipated FOMC meeting. Remember, if I head over to the daily chart here on Bitcoin, you will all remember that I had these blue lines drawn. This first one is the one we've just encountered today, which was the 10th of March. And the next one was the 16th of March, which is our FOMC meeting. And remember, I said from even these points here that we're going to have volatility, we're going to have false starts leading up to these blue lines. Go watch my videos, go back, you can see that's exactly what I said, and that's exactly what was happening. We had a false start, sent back down, false start, sent back down, and that's normal. We're going to see that because the market has no clear direction, and we know Bitcoin trades as a risk on asset, okay? So it's just following the growth stocks, it's following the risk on appetite of investors right now. Whether we like it or not, that's how Bitcoin is trading. Whether we believe in that or not as the long-term narrative is irrelevant, right? Because right now, the price is being dictated by that. So that is what we're seeing. We can see now we've got the final piece of data. And now, without further ado, we can head to next week's FOMC meeting on the 16th of March. Remember, this is where we hear from Jerome Powell and the Fed about what's going to happen with interest rates. Are we going to get a single rate hike? Are we going to get a double rate hike? That's all that matters right now. And I've said my opinion firmly, and I think the market's quite firm on the fact that we're just going to see a single rate hike of 25 basis points. It would be crazy irresponsible for Jerome Powell to increase aggressively to 0.5%, 0.75% in the environment we're in. Super high inflation, uncertain economic environment. Geopolitically, the Russian-Ukraine situation does not seem to be improving. Ceasefire talks are struggling to make any progress. And it would be, irresponsible for Jerome Powell to put the economy through that after such a delicate process of getting out of this pandemic. You've already got grocery bills up, right? You've got food and energy and gas prices. Let's head back over. You can see gas, groceries, and shelter were the biggest contributors to the CPI. Now imagine on top of that, your mortgage price goes up, your cost of financing your car and any other debt you've got goes up. That would be irresponsible for Jerome Powell to do. So unless today's reading came out crazy high, like we're talking, high 8%, 9%, 10%, that could have maybe given Jerome Powell the opportunity to increase with a double rate hike. But as it stands, I don't think that's happening. And in fact, if we head over to the Fed Rate Monitor tool, really interesting tool to see what is being priced in, you can see the market is all but all in on a single rate hike here, 0.25% here. Okay, and you've got nobody really pricing in a double rate hike here. So that's what we're seeing, and then we're expecting, you can see the market's also pricing in the next rate hike on May the 4th. So we can see that's being priced in. So that is pretty much what we're expecting now, and you will see that the market starts to change over the next 6 days to reflect that sentiment and opinion. So that's what we're going to see. Now, what does this mean for us, right? What does this mean for Bitcoin? Are we going to continue to stay at these levels? And what am I doing with my position? I'm going to cover all of that off, but first, let's take a look at the fear and greed index. You can see we're sitting at 28, which again is fear, but it's not extreme fear. We were at 22 yesterday, and again, the market's just having a few false starts, a few, it's confused. You just want to see where's the wider economy going, and we're not going to have any true direction, in my opinion, until we get the first rate hike, people understand, hang on a second, it's not too bad, we're good, and stocks will start moving higher, risk will start to turn back on, then we can see Bitcoin moving, and then once you get the second rate hike, oh, another 25 basis points, that's not too bad, and another one, and eventually once we start getting to 0.75% on the interest rate, 1%, 1.25%, the market really will start to settle down towards the mid to back end of this year once it's gone, hang on a second, we're okay, the economy is not collapsing, maybe by then, hopefully, fingers crossed, we pray for a resolution with the Ukraine and Russia situation. If that can start to subside as well, we can really start to see some green shoots towards, Q3 of this year to really start getting some less FUD and more positive news out there. But for now, Q1 has been a very difficult quarter. We're expecting Q2 to continue to be a difficult quarter before we can start moving to the upside once the market goes, hang on a second, we got this under our belts. What am I doing right now? I mean, these are great moments to accumulate, guys. Let's be honest. When you look at this and you zoom out and you look at the chart and where we're retraced down to, these prove itself time and time again as great times to buy. I remember when we were sitting at 29. I remember just even recently when we were running down towards 32. These are the kind of levels where you always wish you buy, particularly when Bitcoin gets moving, because trust me, when it gets moving, it moves quickly. And trust me, once we move from past 45 and 44.5 on the top of this wedge here, that's going to be an explosive move straight up, and you will not want to miss that. So for me, no time in the market. I just want to spend time in the market. So as much cash as I can get, which I want to allocate to crypto, I'm just dollar cost averaging in, I'm hodling, and I'm seeing out the course, because these are the tough times. These are the times where every pound you put in or dollar you put in right now, you're going to wish you put in another one, because all the upside is here. I mean, for me, I always, as a reset mechanism, ask myself, do I see more downside risk from here or more upside? And I definitely see more upside. There's proven path to 69,000 that Bitcoin just hasn't touched just yet, which for me is an absolute no-brainer. If we look at this chart, I can't remember who shared this on Twitter. If anybody remembers, please put that in the comments below or something. But as you can see, every time we've created a new time high, we've never revisited that all-time high. We've never come back down to our previous all-time high. Never, again, new all-time high. We've never revisited the all-time high from the previous run. So for all those people saying, oh, Bitcoin's going to fall to 20,000, that would mean something huge would have to happen, right? For us to go down to 20,000, we've created a really solid floor at the range of 32 and 29, which was the low before that. It'd have to take a hell of a lot for us to go back down to 20,000, and it'll be the first time that Bitcoin went down to a level from the previous bull run high. It's just never happened. Look at this graph. It never happened in the history of Bitcoin over 10 years. And this is a situation we're in right now. I mean, this is where Jerome Powell sits right now. He presses one button, he raises the rates, and he tanks the economy. If he presses the other, he agrees to low rates and he destroys the currency. So he's stuck. And the reality is he's going to have to carry on through the course of what he's got, which is probably going to go down this rate, try to keep rates as, steadily increasing 0.25. That's going to have an effect on inflation. That's going to have an effect on the currency. And what's the hedge to all of that? What's the long-term answer and solution to all of that? Is Bitcoin, is crypto, is the truly only immutable asset class we have that's decentralized properly, is Bitcoin. And we're hearing all of this talk around CBDCs, Biden with his executive order yesterday really trying to embrace crypto. We saw Dubai further improve their stance on crypto. We saw South Korea elect a leader who's pro-crypto. So we're seeing that. We're going to see more proliferation of CBDCs and the rest of it as governments try to catch up. But the reality is the gold standard is what we're looking at. It's what we're investing in, Bitcoin. And Bitcoin continues to hold the strength. Then it just proves itself year after year. Every time people doubt them and they exit in a bear market, they just wish they continue to hold their position. And that's the key right now. Is this a test of resolve? It's a test of conviction, and it's a test of resolve. It's going to be easy to buy into Bitcoin when we run up to 69,000. Everybody's going to be doing it. Everybody's going to be talking about it. But the hard work comes in now, right? You have to go to the gym in the winter to look good in the summer on the beach. That's the analogy we'll use for that one. Hope you guys enjoyed this video. Appreciate this blend between technical and fundamental analysis. Don't forget to check out NordVPN. Links in description. 70% off on a VPN to get you guys set up. Don't forget, I'm going to link up a video here explaining why the one single rule we care about is compounding. Make sure you go watch that video. It is the one rule you need to know in crypto, and right now we need to manage our psychology. Thanks for watching. We'll see you in the next one.